Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the attention is on President Buhari's proposed 2021 budget. President Buhari presented the 2021 budget last week Thursday, which is about 3 months to the end of the year. This will help the government sustain the January to December budget cycle for the second consecutive year. The 2021 budget was tagged Budget of Economic Recovery and Resilience. The government budget is an annual financial statement which outlines the estimated government expenditure and expected government revenues from the forthcoming fiscal year. Nigeria has consistently run a deficit budget where government expenditure exceeds government revenue. The budget figures were based on some assumptions which include oil price at $40 per barrel, oil production at 1.86 million barrels per day, exchange rate at 379 naira to a dollar, projected inflation rate at 11.95%, and projected growth rate of 3.0%. The proposed 2021 budget expenditure was projected at 13.08 trillion naira, a 21.1% increase over the 2020 revised and approved budget of 10.8 trillion naira. The expected 2021 revenue was estimated at 7.9 trillion naira, 35% higher than the revised and approved 5.8 trillion in 2020. The recurrent expenditure relates to all expenses other than for capital assets, including goods and services, personnel costs, interest payments, subsidies, and transfers. The recurrent expenditure was projected at about 70% or 9.2 trillion of the total budget. The debt service, which is the amount set aside to service the existing loans and pay loans due, was projected at 3.12 trillion naira or 23.9% of the total budget. Personnel cost, which relates to wages, salaries, pension contributions, and other work-related expenses, was estimated at 4.3 trillion or 33% of the total budget. Lastly, on expenditure, capital expenditure, which relates to spending on capital projects like construction of roads, building, hospitals, and schools, stood at 3.85 trillion naira or 29.4% of the total expenditure. This is 54% year-on-year higher than the 2.5 trillion projected for 2020. The revenue is projected based on expected income from the sale of crude oil, income from taxes, duties, and income from government-owned enterprises. The oil revenue component was projected at 2 trillion naira or 25.4%, while non-oil revenue was estimated at 1.5 trillion naira, with the balance of 4.4 trillion from other revenue sources, including operating surplus of MDAs and government-owned enterprises. That said, the budget deficit, which is the difference between the projected expenditure and revenue, stood at 5.2 trillion naira for 2021. So what are the takeaways? 1. The budget assumptions are largely optimistic given the current reality. 2. The recurrent expenditure has continued to increase on a year-on-year basis despite revenue challenges and the need to improve capital expenditure in other areas like healthcare and education. 3. The personnel cost remains high at 4.3 trillion naira or 33% of the total budget, implying that the federal government spent too much of its resources on the small share of federal government employees relative to the population. 4. Nigeria's debt servicing remains on the rise on a year-on-year basis, which raises lingering issue on debt sustainability, as most of these debts are channeled to non-productive sectors, that is, recurrent expenditure. 5. The amount allocated to capital expenditure is commendable at 3.85 trillion naira or 29% based on past allocations, which are significantly lower. To increase the multiplier effect, the fund should be structured mostly as counterparty funding for private sector driven projects. 6. Based on past revenue achievements, The revenue projected is on the high side, especially the portion expected from other sources, including government-owned enterprises, which is about 55.7%. It is simply unrealistic and will drive the government-owned enterprises to focus more on revenue, which could raise fees for services than on providing public services. 7. Based on the optimistic revenue projection, the actual budget deficit will significantly be higher than 5.2 trillion naira, which means projected new borrowings of 4.3 trillion naira may be higher. We may see more support in the form of ways and means, that is, loan from the CBN to bridge this gap. 8. About 420 billion naira has been allocated to social investment programs to sustain the social welfare programs like Empower, Survivor Funds and Grants programs, Homegrown School Feeding Program, and Conditional Cash Transfers. Nigerians should be on the lookout to key into these relevant programs. 9. And the last point, higher budget allocation to the health and education sector increased by about 157% and 65% year-on-year over 2020 budget. This is positive for the sectors. Based on the cordial relationship between the executive and legislature, we expect a prompt passage of the budget before the end of the year and onward assent by the president. Please note that this budget excludes the budget for the states. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comment and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.